Hi, welcome again to another edition of Market Analysis for today, July 18th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets. We were doing it half an hour prior to the U.S. session open. Well, hey, it's summer, and that means it's time to stop worrying and unwind, right? Well, at least that seems to be the market mantra as stocks climbed to new highs yesterday, supported by positive economic data, but there are signs that this rally might be overheating. The S&P 500 logged its ninth record close of the year on yesterday, bolstered by a fall in jobless claims filings and surprisingly strong retail sales for June. Now, as bank chiefs put it this week, with unemployment at 4.1%, consumers should be able to keep spending and driving the economy. So, Americans are feeling good. The stock market is doing well. And with the net financial assets of U.S. households sitting at 366% of GDP at the end of this quarter, up from 358 at the end of 2019. And that's obviously down to a lot of positive outcomes that the economy has had. So the positivity is coming even as interest rates remain at a relatively high levels. And next week, actually a week and a half from now, there should be obviously that meeting in regards to cutting rates. So let's see what that will happen. So taking a look at the this daily candlestick on the Nasdaq, we see how the markets today doing a new all-time high. So therefore, in this scenario, let's do the term-based fib. Since we have had such a strong run, let's do 3 days, including 2 days, including today. So from the low to the high that where we are so far today, back to the low. Well, actually, now let's do it like this. From the low to the high to today. Slow. All right, so using our tool, we want to be able to use the Fibonacci number. So let's just use the first one and then the 0.382%. Since the golden ratio is quite high, and just to be conservative, that's what I'm going to be using for the levels of resistance. As far as support, well, let's do the fib retracement. The same scenario here. Let me just do it like this. Let's grab that swing low to the swing high, and how much of, actually to the swing high of this one, how much of this will retrace. So therefore, let's use the same levels, 0.236 and 0.382. There we go. And you could do the same for the rest of the assets. Obviously, looking to go long. American Express come out reporting earnings, so that'll help the Nasdaq. S&P 500 also in the they're moving higher, all-time highs, new all-time highs actually. So let's just use this weirdness. Let's use the swing low, and let's use that as to place our levels of support and resistance. There we go. Let's use the fib trend extension. And let's just use that. Okay, there we go. There we have our levels for the Nasdaq, the S&P. The Dow is not making all-time highs. So let's just use previous highs as our levels of resistance. 45,000 psychological round value. And then we're going to use 44,600 for support, and then the 20-day moving average for support. Then we have crude oil. So crude oil, with after that gap down early in the week, It has closed it to $68 initially, and then that double top here. The 50 moving average is giving support to the market as we speak. So let's just use a lower level right below it, and then that swing low. So as you see about if the crude oil does a pullback, Nat Gas is steadily making higher highs, higher lows, an uptrend breakout here we have. So use this, leave the same level of resistance 360 and the upper Bollinger Band, and I use the 50-day moving average for my first, and then the 20 for my second one. Looking higher. Let's see, about 360 is where the market will find some resistance from sellers. All right, then we have gold. So gold is looking mighty strong, 33.70 initially, and then I'm gonna use that's previous swing high. Then the market is looking mighty strong at 33.30. I'm gonna use the second one to be a 50 moving average. So I'm gonna leave that like that. Looking to go long, buying gold. Then we have silver. Then we have silver 38.5, or let's use the upper Bollinger Band, and then that swing high, which is right above 39. Then 38 round value, and then this swing lows, which kind of match right here. So for silver, obviously looking to still go long. Let's see if we end up the week, close the week on a positive note. Copper is sideways trading. It did a head fake of a breakout out of this consolidation range. So we're gonna use today's swing high as our first level of resistance, and then 560, our second one. And then as far as our level of support, 541, and then we're just gonna give some more space, that swing low. Still looking to buy. Ooh, Bitcoin. All right, so Bitcoin is sideways trading, it's ranging. So will we continue to see a retracement after this move lower? It could be the case. So let's use that today's swing high, okay, and then 122,000 round value. Psychological is the same levels of support. Let's see if Bitcoin will close the week stronger. All right, so the euro is looking to climb back up to 117. We have the 20-day moving average right below it though, so that'll act as a dynamic level of resistance, 117.5. I'm gonna use this two swing lows here and the 50 moving average. Looking for a swing high, so buying really all across the board. Positive momentum to the upside. I'm just gonna use this swing low here. For us, support 134, and then the lower Bollinger Band. Looking to go long also. Dollar index pulling back. Let's do this right here. This swing low, tying up this 50 moving average. Well, it did open gap down. This one close up here and this one open up here. So will the direction take it to towards our first level of our level of support? If that happens, we'll see a continuation to the upside across the board. But if it does recover, then it'll put pressure across the board. Have a great weekend. I'll see you Monday.